Lecture 27 Signals for Successful Breakouts. In this lecture, you will learn how you can, with some degree of certainty, find signs that will describe the strength of breakouts, which will help you to judge whether the breakout will succeed or not. This is what I'm going to share with you during this lecture. As I've said many times before, only institutional traders have ability to move the market, but we have no chance to know what they are doing. But luckily for smart traders, institutional actions can be interpreted from the price action printed on your chart. So, here are some strength signs for breakouts that will help you to predict how likely the breakout will be successful. The first sign is related to the characteristics of the breakout bar, which is the bar that breaks through the trading range, and it is very important in determining the probability of breakout success. As a general rule, the larger the trend bar and the smaller its tails, the more likely the breakout will succeed. That have been said, I want again to stress out the importance of waiting for the breakout bar to close before making any adrenaline actions regarding the breakout, because of the fact that many large trend bars could end up as a very weak doji bars just moments before they close. In this chart, there is a successful breakout to the downside from this trading range. Notice here that the breakout begins with these strong bear trend bars that broke the support line of the trading range. This is the first sign of strength for the breakout, and most of the time, when this happens, it's more likely that the breakout will succeed, as you can see here. Second important thing to look at during a breakout is the follow-through bars that are formed just after the breakout bar. Unfortunately, there is no specific rules here, but for assessing the follow-through bars, traders must use their judgment to look for any signs of urgency that is expressed in the price action just after the breakout bar is formed. Examine this chart that is showing a successful breakout and try to figure out the characteristics of the follow-through bars. Broadly, if more than half of the breakout bar is reversed and that the follow-through bars are mostly in the opposite direction to the breakout bar, and they are overlapping and having long tails, then the break is considered weak and more likely it will fail. Here the breakout was followed by these strong follow-through bars in the same direction of the breakout, which gave confidence to traders that this breakout will likely succeed. And that's what happened after this shallow pullback. But this is not equivalent to say that successful breakouts shouldn't have pullbacks. On the contrary, most successful breakouts have pullbacks, and this is normal. But the traders need to use their trained eyes to assess how far the pullbacks goes and to look for an urgency in the market to reverse the pullback, and to what degree the pullbacks are seen as an opportunity for traders to add to their positions in the direction of the breakout. Notice here that these follow-through bars give an idea about the urgency among sellers to short the market. Price movement above or below the breakout bar is very important for trading breakouts. For example, in a bull breakout, most institutional traders will add to their longs when the price breaks the high of the breakout bar, adding to the follow-through strength. In this chart, that is showing a downtrend channel here, which looks like a bull flag. This bull flag has been broken by this bull bar here, which is now considered a breakout bar. Now, this bar will be watched closely by traders to see whether the price will go above it, which will be considered a strength sign. As you can see here, the price didn't go below the low of the breakout bar, and once the pullback failed, bulls were buying aggressively, leading to a successful breakout. On the other hand, those same bull traders will probably have their conservative stop loss just below the breakout bar. And if the price retraces below the low of the breakout bar, this is considered a sign for weakness. And many institutional traders will exit their longs at that point. Another helpful sign, especially for conservative retail traders, is when the price after the pullback moves fast in the direction of the breakout with strong trend bars that have no or very small tails. For example, in this chart, after many attempts to break this range, the price eventually succeeded to break to the downside for a bear breakout. In such situation, conservative traders need to wait for a pullback. And if the pullback shows a reversal signal similar to this one here, and if this signal is followed by strong bear bars that close near their lows, it would be safe to consider that the breakout will succeed, which is what exactly happened here. And you can confidently take a low-risk trade with the direction of the breakout using a small stop loss that is just above the recent pullback. Another sign that will help you assessing the likelihood for a breakout success is to understand the context around the current breakout. In this chart, assessing the context around the trading range will help you to predict the direction of the breakout. If the previous trend before the broken range is in the same direction as the current breakout, it is considered a strength sign, and the breakout will likely succeed. Looking at this price action, you can notice that the price was in a downtrend before it pauses within this trading range. Therefore, a breakout in the direction of the previous trend, like this bear breakout here, is more likely to succeed than a breakout in the opposite direction. And this is because of the psychology of the market, as the market tries always to continue what it was doing before. If the market was in a downtrend and traders were making money selling the market, it's likely that there will be a trend continuation. Therefore, a breakout in the direction of the previous trend will be more likely to succeed than a breakout in the opposite direction of the previous trend, especially if the broken channel is a bear flag or a bull flag. Here you come to the end of this lecture, and in the next lecture you will learn more about breakout pullbacks and breakout failures, because they are very important features of every breakout, and the traders need to analyze them carefully to avoid being trapped by the market.